Matt. We've been down in Panama here for the last week or so, having some conversations with the banking industry and the precious metals industry, and doing a bit of business and also doing a bit of advisement and learning about this wonderful country, trade deals, that kind of stuff. It's been a lot of fun. Gonna head over to Argentina here later on today after I jump on a flight, do some business down there as well. And as I travel the world and have the opportunity to talk to people, it's a lot of fun. It's a good way to gather intel, not so much for vacation purposes, but good for learning things about tariffs and trade around the world. So you get to talk to some insiders. Good morning, Richie. Thanks for joining. So, big news today. My phone blew up about 4:30 this morning with the story that the gold has, that the U.S. has tariffed gold. Now they're tariffing, according to a letter from the U.S. Customs and Border Protection, which is on my Twitter. If you go to my Twitter, it's pinned at the top. I've got the letter, or just an image of the letter, from U.S. Borders and Customs Protection, replying to an inquiry about the tariffs, and it states that they're tariffing the 100-ounce bars and the kilo gold bars. Now, the 100-ounce bars, you guys know from my channel as being the ones that are traded on COMEX. That's why they're important. And you also have the kilo gold bars as well. So I've been racking my brains this morning, making inquiries, talking to friends, trying to figure out what the deal is. And there is revaluation, so there's a lot of stuff going on. So this video really is just kind of sort through those things with you guys and kind of talk it through as all this news comes out. Since they're not really targeting the retail trade, I don't think it's going to have a huge effect necessarily on, say, what you get at your local coin shop. If you want to get your 1-ounce bars, if you want to get your 5-gram bars, whatever the case may be, there's still going to be availability there. Shouldn't be any panic there. Plus, this is just tariffing stuff into the U.S. The U.S. has its own gold production. And I don't think 10% on just those two issuances is going to raise the gold price across the board. In fact, I expect there may be some temporary increase in gold price, but I think really going forward, if you look at traditional views on this, if you look at Elliott wave analysis and things about the existing regime, they're expecting that this would raise the gold price and then crash it down a little bit, and then we would have a lot of volatility as the market figures this out. However, I think what's happening is the U.S. actually wants to break the LBMA COMEX stranglehold on the gold price. If you're going to revalue gold, and the United States wants to do this, and they're not, to use that gold to back basically the Treasury dollar system, which I've talked about on my channel. If you can put gold in a sovereign wealth fund, and you can revalue it, and you can revalue the gold price that's held on the books, you can use that higher gold price to support the dollar in the treasuries. Trump said he was going to do this at Bitcoin Mina when I was there last year. Ramaswamy was there as well, and they talked about the plan, and this is what they want to do. Why would you then tax imports coming into COMEX? I think essentially what they want to do is break the chain between the COMEX and the LBMA. So the gold price is really set by the COMEX and the LBMA. A lot of the manipulation and the opaqueness of the gold market, which allows lower prices to occur because you can't get down to brass tacks about supply and demand, occurs through that very opaque OTC market in London, whereas in the COMEX, at least you get more data. And sure, there's manipulation going on with the enforcement and stuff like that, but I think that's the here and now. I think we're seeing a sea change in what is going to happen to these markets going forward, and that sea change has to do with the fact that the U.S. wants to break away, they want to revalue, and they've got to dump the LBMA. Vince Lancy came on his Twitter and said he wants that they want to break the three-way link between the LBMA, the COMEX, and the refiners, which is true, but not all bars go through the LBMA to get the COMEX necessarily, is my understanding. So I think that is a valid explanation, but I think the bigger explanation is value. And you're going to have to, if London is not playing along, which they can't, think about it for a minute. If the LBMA's got this, if you got the fake OTC gold sitting on top of less gold reserves, that artificially suppresses the price. And because there's not transparency, the U.S., it doesn't allow the U.S. to revalue the gold where they need to do it. So they got to separate themselves from the LBMA in order to do that. So that's a possibility that we're going to have that revaluation coming, and that revaluation is going to occur because the U.S. Needs it because the dollar is failing. There's a lot of fear about the solvency of the dollar. There is a lot of fear as well about what's going to happen to the treasury market. And as you see the BRICS countries and all the countries around the world dumping the dollar and dumping the treasury and setting up alternative systems, the U.S. is going into protectionist mode, and they're going to develop their own pricing mechanism for gold, and they've got to cut out their long-term partners at the LBMA to do it. That's step one. The 800-pound gorilla in the room is the BRICS, and their gold markets in India, Russia, China, and Dubai, Turkey, all those countries, because those guys are going to have more potential pricing power in the East. So you're probably going to see at some point some sort of split or bifurcation of the various gold prices between the Eastern and the Western markets. I don't know if the administration has thought this through and how they're going to do that. If you split the LBMA COMEX, it naturally splits the dominance of pricing power in those markets. That would tend to potentially lift the gold price as it's exposed how much paper was there. But unless the U.S. can prove that they have the gold reserves, it's going to call for audits. Because if you're saying that the price is long-term going to go up because you're splitting this scheme together, then all of a sudden everybody's going to want to know who holds gold, and they're going to have to prove it. You're going to have to prove it with audits. And so this is potentially an issue for the U.S. unless what we saw coming into the COMEX leading up to this point was to put more gold below the U.S. Fed and in Fort Knox, and that the U.S. is one of the large people that were doing the importing, which has been speculated over the last 6 months or so. Perhaps that's what the U.S. has done. Perhaps they have a ton of gold there that they brought in to support the system, and perhaps they think that they have enough now that they can break the pricing scheme. Right now, if you're putting a 10% import tariff on COMEX bars, it could potentially cause some sort of squeeze. Think about the contracts and all the positioning. Now the banks and all the big players and manufacturers have to deal with what is the potential effect on all these derivative trades, which is the pricing scheme in the U.S. It's not physical, it's derivative based. So now we've basically broken up, it appears, or trying to break up or at least separate the two dominant Western pricing schemes from each other. Apparently, the U.S. may have gold, or are they going to say that they have it? And then that will allow the U.S. itself to revalue. How the rest of the world's going to respond to that, we don't know. What are the Chinese going to think? What are the BRICS nations going to think? What's London going to think? Very interesting developments. It's definitely protectionism. Definitely what the U.S. wants to do. Sorry about that. Having a little bit of connection issues. What the U.S. wants to do is essentially revalue to their position. Is the rest of the world going to go along with it? And do they have the liquidity? Are they going to stand up to an audit? And what are the BRICS going to do? I think those are the questions going forward. It's going to be very interesting. Being a gold guy in the U.S., running a national gold business, looking at this, definitely, you know, parts of our business where we take imports, this could affect us a little bit. But really, I think this is a bigger play. It's more about the derivative markets, the pricing scheme, the U.S. using this to revalue their gold and those types of things. We'll continue to stay on top of this and track developments. Go to my Twitter, the Freedom Report, if you want to see the Customs Border Protection letter as evidence of it. I know it's out there on other places as well. I would be cautious about thinking that this is going to immediately break the gold market one way or the other. I think the world's going to take some time to figure it out. And we also have to see if this tariff play is longer term and it is connected to a revaluation and a separation of COMEX and LBMA. That's speculation at this point. We don't know, but that's definitely something that we're going to have to pay attention to. I'm about to go hop on a plane, fly out to Argentina. When I get back, I'll do a video on some of the stuff that we talked about in Panama and Argentina, bring you guys some intel. Also, I had a really good interview with Danny over at 𝙎𝙐𝙋𝙊𝙍𝙏. That video is probably going to be out by the end of day today or sometime soon, he told me. In the next day or so. Go watch that video. I talk about some of the stuff that we discovered in Panama, and I talked about what's going on more from a macroeconomic perspective around the world, which I think will also help put this video in perspective. And when I get back to the States in another week or so and I have time, I'll do a good detailed video on all the things that are going on from the economic and gold perspective. I'll tell you what I'm learning in my travels, and we'll kind of take it from there. Thanks for paying attention to the Freedom Report. Appreciate you guys, and we have more time. We'll cover this more. Stay tuned while I'm in the air to my Twitter as we post updates as well. Thank you guys so much.